results. Revenue at 3.17 billion euros, up 4.2% year over year.
Reporting third quarter sales up 4.8%. Franklin Golf Romeo.
The Fed policy will be driven by the pace of the data. State policy will remain accommodative.
Futures off session low, still down about 1% on the day for a little more than 4 pennies.
This particular iron condor is has a potential profit of 38.20 or 24% at the top of the graph there.
24% return potential.
Now, a lot of times people will buy an extra long on one side or the other, or both, and that comes at a cost. And if you notice that the top of the graph now is like 18%,
right?
And so the potential, essentially, the extra longs cost like $800, $845, which is equivalent to 5% of the risk for this trade. So they've reduced their profit potential down considerably. So
and also cut the theta down, so it slows down your ability to achieve your profits.
Exactly. Now, what would be the value of this insurance? And my question is, does it have value? So if this market were to go racing to the upside, the question is, it's going to do you any good? Now, many people they'll adjust their condors when their profit is down 7-8%, to keep on top of it, and a typical adjustment at this point would be to double up their number of vertical spreads and roll them out, which would give you something like this. It gets you a little farther from the fire,
right?
Okay, but it just annihilates the potential in the trade. And so I have. Can you see my cursor?
Yes.
Okay. I've increased the spreads on the side by 50%, and I added a couple more long this adjustment.
Right. So it was originally a 20-lot iron condor with a hedge on the call side, a hedge on the put side, and now it's a 30-lot vertical on the call side, 20 lots on the put side, and hedges on the vertical. Yeah. I just want to call everybody's attention who might have missed that it was a 20-lot initially, and now it's up to a 30-lot.
Right. And that was an effort to keep the graph in a good position. Now, personally, when I look at this, I would look at this adjustment and go, well, have I improved the trade? Is there still worthwhile value in this trade? What is my risk reward in this position? I actually increased the risk on this trade, as it would be. It's a little farther down here in the hole. On the call side, you have a margin requirement of 28,797 on this now,
right?
Which is up considerably from, I think it was like 16 or 17 more.
Right.
So after it went to the upside, we made the adjustment. Well, the market reverses, and here we are now on the other end of the scale. We've been whipsawed, and now look at where we're facing. There's really not much hope for this trade anymore. Okay, so that's kind of a product of a single. Oops, I'm sorry. Of the single longs for insurance and delta flat and not. Now, what we have here, this is a trade that we trade a fair bit in our our Skype group. And essentially what we do is we start out, you can't see all the strikes out here, but we start off with an at-the-money straddle, and it's embedded in the condor itself. And I put the short strikes of this condor at the same place as the other condor I showed you before,
Right.
except it has a little wider spread on the condor itself to get the proper ratio from 120 to 1. If I had tight reds, I'd have to make it like 1.
Thank you for watching this clip of our Options Tribe webinar. The rest of the recording is available on optionstribe.com. I'm Seth Freudberg, and I've been hosting the Options Tribe since May of 2011. We've brought in options experts from all over the world to make excellent presentations to our members. So go right now to optionstribe.com to learn more about options education, or you can send me an email at sfreudberg@smbcap.com.